Every now and again, traders experience a losing streak. This week in particular has been a brutal losing streak for me, and it's one of those times where it's not the kind of video I want to share with you guys, but it's certainly the kind of video that I believe will help you guys in your own journey developing as Forex traders. In this video, I'm going to break down my trading week, day trading Forex, in particular focusing on pound dollar. I'm going to share all my trades taken, an update on my account with the 5%ers, and exactly where I went wrong. So if ever there was a time that I need a like from you guys, it's this video because it's one of those painful videos to create. So please remember to like, subscribe to the channel, and let's get straight to it. So I'm going to break this video down into sections and I will timestamp them in the description below, so make sure you check that out if you want to jump to a specific part of the video. All of the software I'm going to be using will also be linked in the description below, including my charting and my prop firm, which is also my broker. They are who I trade with in this video. I'm going to start things up here in my platform in MetaTrader 5 so that you can see exactly what I've done this week. So this week I've taken 3 trades. Okay, maybe I didn't completely overtrade, but you don't know the quality of these trades just yet. And as you can see, these have been 3 consecutive losers. So I've had a red week and it's not pretty. So I'm currently down 3 trades. That's 3 are on my account, the 5%ers. So in my live account, this would be down 3%, but my risk is reduced for my prop firm account. So this is actually down just under 1% on the account. And the way that I went wrong trading this week comes down to 2 main factors. As we all know, there are so many facets to trading. You have to balance every individual part of trading perfectly to execute the best trades and effectively succeed as a trader. So for me, the 2 areas where I really underperformed in my trading this week comes down to analysing the overall market phase on the daily chart, which I will talk to you about in a moment on my charting software. And the second part that I underperformed in my trading this week comes down to fundamental analysis. So let's start there. Here I am on forexfactory.com. It's a brilliant free resource that you can use to check out any upcoming economic news and events that may influence the Forex market. For me, I have this filtered specifically on US dollar and the Great British Pound because that's the currency pair that I day trade. And I've also got it filtered on just the high impact news. Now this is organised here so that you can see the week commencing the 18th of March. That's the week that's just gone, the one that I'm sharing with you now. And there's been quite a lot of news coming out this week. Needless to say, it's been quite a choppy week in the market. The main news headlines for me this week have been FOMC coming out on the Wednesday. And as soon as I saw that at the beginning of the week, I thought, this is a week to start off carefully. FOMC historically can create choppy price action. Traders are waiting to see how the market's going to react to that news. And so it's always best to be on the side of caution when FOMC is due to be released. Alongside FOMC, we've also had CPI, Consumer Price Index for the pound, flash manufacturing PMI, and the usual unemployment claims for the dollar, and then flash manufacturing for the dollar as well, and retail sales for the pound. So there's been a mixture of different news coming out, but the main one for me that I was most interested in was FOMC coming out Wednesday evening. So straight away, my bias for the week based on this was to start off carefully, wait until FOMC is released, and then maybe look for trading opportunities later in the week after the news release. So how simple is that? Don't trade Monday, Tuesday, Wednesday wait, Thursday, Friday maybe trade. What did I do? Of course, I did the opposite of that. I traded Monday, Tuesday, and I took some losers. I didn't trade Wednesday. And then Thursday, Friday, I was too cautious because I was down on the week and I missed some brilliant trading opportunities. Talk about a frustrating disaster week. And the second part that I underperformed in my trading, as I said before, was being able to truly analyze the overall market phase the daily chart was in. What do I mean by that? Well, there are different names for this, but generally the market will go through different phases. For example, if the market is in an uptrend, there will be, of course, the uptrend. Then the market may decide to pull back. It always has to pull back at some point. It can't just keep on going up forever. And then once it's pulled back, there will usually be a range, a choppy period of indecision where price is either waiting to gather some momentum, continue that uptrend again, or from this choppy price action, it will be deciding to turn and start a new downtrend. So there will be an uptrend, a pullback, a consolidation, and a downtrend. And vice versa, if it's already in a downtrend, it's reversed. There will be a downtrend, a pullback, a consolidation, and then either a downtrend continuation or a new uptrend. These are the very basic stages of the market. And applying that theory to pound dollar, this is the daily chart, and I'm taking it back in time here so you can see the candlestick data up until the start of this week. Looking at most recent price action, we can see here that price has been in an uptrend. Last week we saw the pullback, and my kind of first instinct really was that it could start off choppy, which would be that consolidation phase where it would be deciding whether or not it's going to continue up or it's going to drop down. However, once the market opened on the Monday, instead of waiting to see, because it's a pretty bad idea to trade during a choppy, uncertain phase, it's always best to wait and see what the market's going to do. I actually got into a trade. And this is what happened. On the Monday, I was looking at the charts and I had the 15-minute time frame open, which is my usual time frame for trade execution. I'd done my top-down analysis and I figured that we were in this pullback, but I knew that we were in an overall uptrend and I wanted the market to continue and I wanted to get at the beginning of that move even more. But I got carried away with myself and I didn't wait for that larger time frame confirmation from the daily or from the 4-hourly to get in. And instead, I just looked from the 5-minute and calculated an entry from this. I used my Fibonacci retracement tool from the low of the day. I applied it to the high because at the time I took the trade, the current daily was up. We had kind of consolidated around the bottom and then broken the high here. This data here is from the Friday, and I felt like we were going to start to turn. It was starting to swing higher. Although if we look at the greater picture, all we're doing is just consolidating in that choppy phase. I couldn't see that. I was just blindsided by what I wanted to see from the market. So I got out my fib tool and I waited. And when we got this candlestick pattern here at 10:30, this pin bar, rejecting the lows within this fib area, I took this as confirmation to set a position for a long. I set it just above price action at the high of the fib, and I used a tight 10 pip stop, which was below this key daily level. And at the time, I was targeting the institutional price level, which was a break of the high of day. And as we got this push up here, I took this to be a strong push up with momentum because it was a large bullish candle. So I did a big mistake, which was that I added to my position. Usually this wouldn't be a mistake, but it would in this circumstance because this trade is, in my opinion, not a quality. It's a weak trade as per my trading plan. It's not based around key daily level. I'm not even really utilizing daily confirmation, so it's a weak trade. So for me to add to this position was definitely a risky move, and unfortunately it didn't work in my favor. All that happened was price came down. It triggered me into my second entry, but I got this green push up here. So at the time I thought I'll just go with it and see what happens. Fortunately, it didn't sustain and price just came down and it stopped me out of 2 positions. So at this point I was effectively down 2 positions on the day because I doubled up my risk. This alongside with the fact that it was weak daily price action and I knew that FOMC was due out on Wednesday, I just sat the rest of Monday out. So I'd started the week down too. The next day, Tuesday, as per the start of my weekly bias, I was supposed to not trade at all because FOMC was due the next day. So I knew that price action was going to be choppy. But I started Tuesday down too and I thought, let's just have a look at the charts and see if there are any trading opportunities. That can be dangerous if your instinct is telling you not to. If you have made the decision based on news to wait, then it's probably best to not even look at the chart. Just avoid temptation. But I didn't do that. I had a look, and then once again, I kind of got blindsided by this need to make back what I had lost at the beginning of the week. So here I am on the 15-minute time frame, and you can see that Monday was pretty much a consolidation, very, very low volume day. It didn't exactly move that far from my stop. But then on the Tuesday, we started to get a push down. Price was starting to build this downtrend intraday. And so I thought, let's look for shorts. In fact, it had already broke the previous daily low here, and I was keen to look for an entry for a short, aiming for a retest of this. So my bias was short. Zooming in here on price action during the New York session, which is the session that I trade, we had a push up into this institutional price level, and then we started to get some bearish candlesticks. Now dropping to the 5-minute time frame, which was the time frame I used for this entry, I thought that this was sort of coinciding with this little consolidation area here. And I decided that this little price action pattern was a double top pattern. We got a push up, down retest of the institutional price level, another push up, and then price drop below this level. So I was looking for a retest here for an entry short, which I was hoping would do this pattern. So I set an entry just above the institutional price level. I used, once again, a tight stop above this area of price action, and I was setting around about a 2-to-1 profit loss ratio. Now, at least for this trade, I only set one position. But this is what happened. It just went straight up to my stop. Once again, this was not an A-quality trade. Even forgetting FOMC news, which was due to be released, my trade was not rooted around a key daily level, which is my plan. So it's a very slack trade in my opinion, and I certainly wasn't proud of myself. Wednesday came, and Wednesday morning I was definitely waiting for FOMC news release. Once again, back on the 15-minute time frame here, I've moved it forwards to the Wednesday. You can see here that 6 o'clock GMT FOMC news was released, and obviously this worked in favor of the pound because we saw this short-term push up. A lot more volume came up. In fact, there was a lot more volume in this push up here than we had seen for the previous few days. But at the time, unfortunately, I couldn't trade this, even though I knew this news release was due, and ideally I would want to be sat here in front of my charts, in front of my trading platform, ready to take a trade. And there was definitely scalping opportunities here on the faster time frames, especially at this point here, just after the news release. This would have been a perfect entry for a long. I missed it because this is the time of day when I get my little boys ready for bed and we have our bath time routine, and I just wasn't prepared to miss that. So I decided that I would have a look at the chart on the Thursday, see how the dust settled and if there were any trading opportunities. But this is where my disaster week got even worse, because at this point on Thursday I was down 3 trades, I was red on the week, and at that point, instead of waiting patiently ready for the market, I was almost a bit scared to trade, I'll admit it. I was fearful to get in. The fear of losing had kicked in and I hadn't even recognised it. Trading emotions again. And on the Thursday, I had an opportunity to take this trade. And this trade I had calculated around about 2:30 GMT. As you can see, we were in a strong downtrend, and I even dropped the 1-minute time frame to calculate this trade plan because there was an opportunity for a scalp here on the fastest time frame. Now, I used this structure to apply my fib, and at this point I had set my trade plan for an entry for a short. At this point, I could have set my entry, I could have set my stop, my targets, I could have automated it, I could have walked away, and it would have won. But I was being too conservative because I was already down on the week. I thought I want to see a candlestick pattern, a signal telling me that the trade is ready. So I wanted to see like a bearish pin bar or a bearish engulfing candle, something to make me feel more comfortable about getting into this trade. So I set a trade alert instead. Now, unfortunately, there was literally about a 2-minute delay on my trade alert for me getting on the screen and looking, and that was long enough for price to have basically done this pattern and then immediately dropped. I saw this drop and I practically ran to get to my broker, but I just couldn't get in the trade in time and I didn't get a retest. So the trade went without me, and at that point I was kicking myself for not automating it, for not setting a sell limit order. I was being too conservative. So I thought, let's just carry on looking and see if I have another chance. A bit later in the day, so that was this trade up here, we had the drop down and I set another entry for a short here. But at this point, it was getting to the end of the New York trading session. I'd already missed an opportunity. I was down 3 on the week. And at this point I told myself, well, if I got into this trade, if I set a sell limit, would this be revenge trading? Because I'd missed the early one and I was down, and I just got myself a bit confused and decided, just wait, this obviously is not working out. And in the end, this would have worked too, and I would have won, but I didn't set the trade. So if I had just taken those 2 positions on the Thursday, I would have made back what I had lost on the week, but I didn't. I just got myself worked up and frustrated. So I decided that it's never a good place to work from frustration. You cannot trade from an emotional place. It never ends well. And even though I didn't want to do it, I just swallowed the loss on the week. And I've decided to just walk away, and all it's done is set me back only a couple of weeks winnings, and I know that I can easily make them back with patience and with focus. So jumping here onto the dashboard I have with the 5%ers, the prop firm that I use to take my trades in. And here is my account. I am in a $20,000 account challenge at the moment, working towards that profit target of $2,000. And I had a really nice uptrend here on my equity, but at the moment, as you can see, I'm having a little bit of a dip down. But that's why I am just taking a few days off from trading, because the importance, once you have a successful trading plan, success as a trader lies with trading psychology, with emotional control, being able to handle your emotional experiences, being able to focus and center yourself when things go bad. And that's what I'm practicing at the moment. So I've been using my usual techniques, meditation, yoga, deep breathing, walks in nature. Everybody has their own way of handling these losing experiences, and I've got my own techniques to use when I need them. I have got a separate video on that if you want some more information. I'm also excited to share some new, more mindfully based content with you guys soon. I'm working on some trading affirmations videos, so make sure you're subscribed below so you can get a notification of when they're released. But that's definitely the importance of choosing the right prop firm to trade with if you are ready to trade with a prop firm. I'm so glad I've gone with the 5%ers. I've said it so many times in the past on my videos, but they definitely are the prop firm that I choose to recommend because they give you unlimited time to be able to complete the challenge, which for me is so helpful. It is priceless. This week, it's definitely come into play because instead of me feeling pressured to hit a profit target by a certain time, I can relax and know that I can just take my time, I can come back to the markets and they will still be there. My account will still be there. All I've got to do is manage my risk, manage my emotional well-being. And so this is a shot of the program I'm currently enrolled into, the instant funding account, hyper growth. And I'm super excited because it's in the name. Once you get your account growing and once you get making some profits, it really does have the potential to make a lot of money over time. So it just brings patience into the equation. It's all about focusing on the process and then trusting the results will come. If you want some more information about the 5%ers, about the different programs they offer, I've got a separate video, or you can also check out the link in the description below. Meanwhile, if you've enjoyed this video, please let me know by smashing the like button. Don't forget to subscribe to the channel below, and I'll catch you in my next video. Thanks for watching. Bye.